Hello and welcome to BitBoy Crypto. I am your host, BitBoy. As always, we make videos on this channel every single day. We'd love for you to be part of our community. We call it the Bit Squad. Today, we are fortunate to be joined by Andre from 1 Minute Economics. It is a YouTube channel. Maybe you have seen it. And he's recently written a book. And I thought that it would be pretty cool to talk to him about different things going on in the world economy stage, because that really heavily relates to crypto. So this isn't a sponsored interview or a sponsored post or anything like that. I just thought it'd be cool to have him on the channel and talk about it because guess what? I'm not an economist, or an economist. I think I mispronounced it. But so Andre, how are you doing first of all? And tell us a little bit about your book and then we'll go from there.
First of all, thanks a lot for having me. It's a pleasure to be on. Thank you guys for watching. And yeah, many people kind of know me as the Economist on YouTube. It is a bit crazy how a channel that started as an experiment, it still kind of gives me goosebumps to see that, nowadays I even get featured on MSN. I saw my animations on TV in Croatia. 3 weeks ago, I saw them in Kenya, believe it or not. So it's just crazy how something goes from a hobby to being all over the place. And this kind of gives me a sense of responsibility because many people do consider me the economist on YouTube, so to speak. And I didn't want to be left with this kind of lingering feeling of guilt for having had certain concerns but choosing not to voice them, because it's never comfortable to do, especially now when, nobody's panicking, essentially. So I decided that anyway. Kind of what I do on my channel is I don't focus so much on telling people what they want to hear. I've always approached my channel, my books, from a position of someone who can kind of afford to tell people what he thinks they should know. I don't necessarily rely on this income for my livelihood. So I do appreciate the freedom of doing essentially whatever I want with my content. And when it comes to this book, it's kind of a best effort thing on my part to be all over the internet. Like I will be recording approximately 100 collaborations with people on YouTube, on podcasts, and so on. And I'm kind of venturing outside my comfort zone, putting myself out there with the intention of saying to people, look, I have these concerns about the economy. 1, 2, 3, 4. I do believe that some very bad stuff is coming. And unfortunately, there's nothing you can do to stop it. The silver lining, however, is that what you can do is learn how to position yourself. So yeah, I've written my second book, which is called The Age of Anomaly. I kind of joke with people that if you make it a goal, you can work out your biceps with it. It's like a 400 plus page book, and I know that for most people, it's going to be the only book about financial preparedness they're ever going to read. So I kind of decided to work with that and said, look, I'm going to create this from A to Z type guide and tell people, hey, this is how I think we should start. Let's go through economic history. Let's find common denominators. Let's see how those common denominators help us position ourselves. Let us then go through asset classes one at a time, figure out what kind of a strategy makes sense for your particular situation. And in the end, it's my goal to explain to people that it's not rocket science. And especially if you have the luxury of watching this video now when nobody around you is panicking, because it would have been far more comfortable for me to go on this tour on YouTube, in the podcast scene as well, when everyone's panicking. Obviously, people would have been far more receptive to my message. But putting together the type of strategy it takes to land on your feet and executing everything, this takes time. And it wouldn't have been very intellectually honest on my part to just wait until everyone's panicking just because it would make my life easier. So I'm here now, and I'm here to people telling them that if they take just a little bit of meaningful action after watching this video, whether or not it includes buying my book or subscribing to 1 Minute Economics, if they at least take a few moments to think about the things we're going to be discussing today, I think they're going to be very happy in the long run.
Yeah, I think that's really good. I think specifically for my channel and the world of cryptocurrency, I know you said you've been on some different channels outside of cryptocurrency, obviously. But for us, our biggest thing is for people who are passionate that Bitcoin's going to eventually be the world currency, because the financial system that we have and the economic system we have in the United States and really all across the world, where people are basically just printing money, that kind of devalues money, and that system of economics is a flawed system and eventually is going to crumble. So kind of, what's your take on that? Do you think that cryptocurrency could be onto something with trying to, switch out of the broken system that we're currently in and things like that?
Will cryptocurrencies be the solution? I don't know. Will they be a part of the solution? Most definitely, I believe. Personally, I'm a hands-on economist, so when I talk about crypto, I don't just talk from the perspective of someone who read a few books and then essentially regurgitated the stuff you read. I'm a hands-on guy. I trade crypto on 17 exchanges. I've done some arbitrage in South Korea. I have open positions even on BitMEX right now. And as someone who does actively trade crypto, I can say that for all the right reasons, crypto is here to stay. And my two pieces of advice for people when it comes to kind of crypto in the context of the next financial crash would be, first of all, remember what happened to precious metals after a global financial crisis of '07 to '08. Or in other words, even if I do believe that strong cryptocurrencies represent excellent choices for hedging against precisely that kind of uncertainty, people should understand that markets frequently move in the direction of maximum pain for both buyers and sellers. So don't expect the market to reward you right away. Again, precious metals, what happened? You had a global financial crisis and everyone was expecting precious metals to go up right away because they're a kind of hedge that is supposed to do that. But they didn't. They went down initially. And as the market eventually digested the news, then they went up to their highs of 2011. The same principle might very well be valid when it comes to crypto. Even if you make all the right choices, the market might try to shake you out at the beginning. So you do need to come to terms with that. Your strategy does need to include that because, again, the market is not necessarily here to make you a ton of money. The market is, in a lot of cases, here to cause maximum pain for both buyers and sellers and shake out as many weak hands as possible. So that's something to keep in mind. Also, number two, things that worked in the past might no longer work as good. And I believe the next financial crisis might be a catalyst for something I refer to in terms of crypto as a bit of a big divergence type situation, in that we might no longer be able to refer to crypto in a way that encompasses everything. Because if banks are going to close down, if people are going to lose confidence in maybe the monetary system, then of course the average person might be tempted to say, okay, maybe it's time to have some exposure to Bitcoin, or maybe it's time to have some exposure to a good altcoin. But will the same person say, yeah, everything around me is crashing and burning, so let me just spend all my money on Dentacoin? I don't think that's going to happen. So
unless they have bad teeth. If they have bad teeth.
Yeah, maybe so. And that's kind of the thing. By big divergence, I mean that scenario in which you have the best of the best in terms of crypto, that your Bitcoin and your altcoins that genuinely deserve to be there, which have the tech to back it up, which have the development team to execute and whatever. So currencies that deserve to exist. And on the other hand, you're going to have a lot of pump and dump schemes that might not do as well as they've done. The problem is that depending on how you look at it, is that in 2017 and early 2018, a lot of people have made a lot of money, and it's kind of a situation in which a bad investment strategy has been rewarded, and that reinforced a toxic way of going about investing in crypto. And many people kind of made a lot of money despite investing in pump and dump schemes, despite not doing their research, despite not caring about doing proper due diligence. They were still rewarded, and many of them will, in my opinion, ultimately end up getting shaken out. And if there's ever been a context for you to say, okay, fine, maybe I've made my money investing in questionable altcoins, but that's probably not going to be the best strategy in the world moving forward. And instead, I would recommend putting in the work, focusing on the tech, focusing on the development team, and it's on you, essentially. It's on you to choose the right assets to hedge. Because, if you do your due diligence properly, and if you choose the right cryptos and make them a part of your hedging strategy, I think you're going to be a very happy camper. Because even at these prices, of course, it's not the perfect scenario in the world. Obviously, if I had a time machine, I'd go back to 2009 on Bitcoin and accept that guy's offer who said he'd give someone 10,000 Bitcoin for $50 and nobody wanted them. So obviously, those opportunities are gone.
Yeah.
And as the industry matures, there's going to be inevitably less and less low-hanging fruit. The same principle has been valid when it comes to investing in domain names or anything else, really, for that matter. But there's still quite a bit of investment potential, especially since people talk about, institutional investors being involved. And it's a joke. at these market cap levels, it's a joke because crypto is a great space for you and for the two of us to invest. Because if we have $10,000 burning a hole in our pockets, we can just market buy Bitcoin at any of the big
Yeah.
exchanges, and it's not going to make a dent in the price. But if Goldman Sachs has $10 billion burning a hole in their pockets and they decide to market buy Bitcoin worth of 10, that's going to be a problem. They kind of become the market. And if you kind of see things from this perspective, you do understand that there is quite a bit of upside on the table, because for crypto to become a place where institutional investors can meaningfully park decent amounts of money relative to what they have, the market cap would need to go up quite a bit. We do have news right now, of course. They're dipping their toes, so to speak. They're setting up trading desks. They're kind of hiring a few people. They will, without a doubt, be following the money. But this is just peanuts compared to meaningful involvement. And for that to happen, again, the upside potential is definitely there, in my view.
Yeah, I think that institutional money coming in. So far, I think we've seen it come in and kind of try to push the price down. We saw the New York Stock Exchange yesterday. We're recording this on Saturday, so on Friday, they came out and announced that they were basically, or ICE, the company that owns the New York Stock Exchange, came out and said they're trying to create some kind of platform where people would be able to buy and sell and trade and spend crypto with companies like Microsoft and Starbucks. Huge bullish news. And then later on that afternoon, someone from the New York Stock Exchange came out and said, well, Bitcoin's still a little iffy. And it's almost like, orchestrated FUD. They got this announcement where the news is going up, and then they come out, and we've seen it with Goldman Sachs also this week. Came after they said they were going to get into trading earlier this week. They said that Bitcoin may never come back to where it was again, and I think all that is they're all trying to keep the price down. I think that a lot of these institutional investors kind of want the price down, but back below $5,000. But what are your thoughts on that? I mean, that's the common feeling is that the reason why, with all the news we've had about cryptocurrency recently, the reason why the markets are not recovering and going up is because the whales or the institutional money are pushing the price down. So what are your thoughts on that?
There's definitely manipulation going on in all markets, and especially in a space as opaque as the crypto world, that's a lot more prone to manipulation. You kind of have to accept that. With additional freedom and all the awesome things about crypto, does come a certain Wild West type element, and many more things go in the crypto space than in other ones. And is there manipulation? Yes. But just like in other markets, even if on a different scale and with different methods, big players, big whales, they can manipulate, and they do manipulate for short-term gains. But longer-term speaking, they will inevitably adapt to what the market wants. So, of course, especially given the fact that the liquidity levels in the crypto world are not spectacular, there's bound to be tons of short-term manipulation. There's bound to be, all sorts of FUD, and well-positioned players take advantage of that. And the same way when FOMO kicks in, kind of the same thing happens, but in reverse. But in the long run, the market's going to do what it wants to do, and whales will inevitably adapt. So many people have, the same discussion about gold, about precious metals, about other markets as well. There is, without a doubt, manipulation. There are case studies to that effect. It's not just, conspiracy stuff. But for the most part, that manipulation is limited to things that generate shorter-term gains. Yeah. Whereas in the long run, even the bigger players, they do end up adapting to what the market wants.
Just whatever the general market sentiment is. And right now, it feels like over the last, I would say, month or so. And I think there's charts to back this up in terms of the amount of people longing Bitcoin and shorting Bitcoin. We're kind of starting to get almost even with the people that are doing either one of those things. So I'm hoping, the sentiment will turn around and we will be able to, go with a bullish market. I think we're about to be bullish. Could be wrong. Of course, ETF announcement could be absolutely huge. What are your thoughts on prospective ETFs and what that could do for the markets?
I believe it's inevitable. It's inevitable that there's going to be a ton of, the market there's still plenty of room for the market to become way more mature than it is. And without a doubt, an ETF is going to be a part of it, whether it gets accepted now or not. Just what I try to tell people is to have a sense of perspective. Just think about the last bull cycle, about 2013, when you had 80% of the trading volume happening through Mt. Gox, which used to be a Magic the Gathering.
Yeah.
platform, and then you had the second biggest exchange, BTC, which was nobody really knew who owned it, and it was just so much shadiness with it, and so on. Whereas nowadays, again, as someone who trades on 17 exchanges, there are many decent ones out there. Are they perfect? No, but they are exchanges with armies of lawyers. There are exchanges that kind of know their thing, and it's just amazing how much the crypto space has grown. And yet again, it's one more reason to realize that crypto's here to stay. A natural progression is going to be, yeah, there is for sure going to be an ETF. There are going to be many, many more developments related to adoption, related to, all that. But as always, the main challenge is not to be shaken out, because it tends to happen in markets like crypto. You have not necessarily just crypto. In my book, I give examples starting from 1636 to 1637 when the tulip mania peaked. I give examples recently with the 2015 to 2016 short domain mania. I think I'm the only economist who even studied that one. So whether we're talking about stuff that happened hundreds of years ago or stuff that happened 2 or 3 years ago, unfortunately, it's just how things work. People get overly excited. They think they're going to get rich overnight. They pre-order their Lambos thinking that the price can only go up. And these people get shaken out. The same thing happened when it comes to domains. I still remember, you had domains that were worth $8 in 2009, 2010 that ended up being worth over 2,000 each at the end of 2015. And I had brokers from China, because interest was primarily from China, telling me about how awesome it is that people are taking out high interest rate loans in China to speculate on these domains. And I asked him, okay, great, but what happens if prices go down? And he kind of, he was shocked of me even daring to say that. And these things happen, especially when it comes to technology stuff, whether we're talking about domain names, crypto, railway stocks in the 18th century in the United Kingdom, .com stocks, or whatever. We do tend to get carried away when investing in the hottest thing. And yeah. And the same way we lose our minds on the upside, we go into full-on panic mode on the downside. Like, for example, I did open it was one of my better leverage trades this year, a 12.5x one on BitMEX as an average between two orders at just below 6K, precisely because everyone and their dog was bearish at that point in time, and he had people on CNBC giving mini tutorials on how to short Bitcoin, and it was just craziness on this level, So I do agree with you that at this point, the risk to reward ratio does make crypto quite attractive. Again, not crypto in general. Now more than ever, be careful what you invest in. But personally, I think the time to be excessively bearish has gone. And as of this point, can I guarantee that prices are only going to go up? No, but I look at the potential downside and I look at the potential upside, and based on that, I kind of tend to determine that it's more rational to be cautiously optimistic at this point than to be cautiously pessimistic.
Yeah. And I think kind of what we're seeing right now with the markets is, if you go look at the chart from Bitcoin last year when things really started going, in an upward direction, it still had pullbacks, it had pullbacks. And I think that's kind of what we're experiencing right now. So, I'm definitely not in the camp that thinks Bitcoin's going down below 3,000 or back below 5,000. I don't think it'll go back below 6, but okay, so I want to ask you one more question. Basically, one thing we've talked about a lot on this channel is how, it's not just the value of Bitcoin that's going to be going up, but it's the devaluement, if that's a word, the devaluing of fiat across the world due to any number of circumstances. And, I like the way that you put it where, you say you don't know when this crisis is coming, but there is an impending crisis. And, we're starting to see this like in Germany with Deutsche Bank supposedly having a lot of problems. We're starting to see this with the Italian economy is having a lot of problems. And with you actually being over in the European Union, I thought it would be really great to get kind of firsthand perspective from you on what is going on there and what you think the implications of those two situations will be. And also, if there's anything else that I'm missing that's going on over there that could be really huge.
Oh, there is a lot of craziness going on in Europe, and you've mentioned Italy, a pretty interesting case study of kind of a coalition between the extreme left and the extreme right. So a lot of unprecedented stuff is going on here. And for that reason, I believe it's a valid concern to kind of at least think about a situation in which governments and central banks lose control. And since I'm on this campaign telling people about my book, some people ask me, hey, you have to be bearish on, for example, real estate, right? And I tell them, kind of, but I'm still not selling my real estate because the problem is this. As someone who even actively trades crypto on leverage, I'm not exactly the type of person who is easily spooked by something like a 60% crash in the stock market. I am, however, terrified of what could happen next because the elephant in the room is that when the narrative changes from we're having a crash like with the dot-com bubble or the Great Recession, but don't worry, governments and central banks will bail us out. When the narrative changes from that to who exactly will bail out governments and central banks, that's the kind of thing I'm afraid of. And going back to my example with real estate, yeah, of course, if you can time it perfectly, it makes sense to sell your real estate before the deflationary crash, then buy back in after the crash, and then once or if governments and central banks lose control, you're going to ride that wave upward. Because yes, I agree with you. Should that loss of confidence that leads to them losing control occur, then everything that's not tied to governments and central banks will skyrocket upwards because as you've mentioned, it's the dollar and the confidence in the United States, in the European Union, in their ability to manage these things, that would be going down. And that's why I tell people, if you think you can execute something like that perfectly, by all means, but selling real estate takes time. Buying back in takes time. If you're that confident in your ability to do so, more power to you. But I personally choose to be cautious in that respect. And yes, accept that very possibility. Whether we're talking about crypto, whether we're talking about even stocks, real estate, anything else for that matter, once this loss of confidence takes place, I do expect there to be very violent upswings when it comes to anything that doesn't have to do with governments and central banks. Because I do believe that, yes, that is the elephant in the room, that bonds are way overpriced, that there's just people are having way unjustifiably high confidence in governments and central banks. This leads to ridiculous situations like here in Romania, I helped someone obtain quite a large fixed interest real estate loan at 4.5% in our very unstable currency. And I did that before interest rates started going up over here. And the person at the bank told me, hey, don't you want these juicy variable rates? Look, the interest rate is lower. No, I want the higher ones, please. And as they went up, that person is already now better off than if he would have taken the variable ones. And this is just one example. Like, I was reading that contract because I actually do read. I have this bad habit of actually reading contracts.
You're the guy. It's you. You're the one that does it.
Yeah. And as I was reading them, I was, oh my God, I cannot believe a bank is giving a Romanian a huge loan at 4.5 interest rate, fixed. It cannot go up in an unstable currency like ours that's prone to crash sooner rather than later. So these are the types of anomalies that are textbook examples of the fact that there's just way too much confidence in anything that has to do with sovereigns, governments, central banks, whatever. The same way you have countries like Spain with huge unemployment, with problems like what they have when it comes to the Catalan dimension and whatnot, who sometimes are able to attract market financing at lower rates than the United States. So yeah, the elephant in the room, in my opinion, is this, that people tend to have too much confidence in governments and central banks, and historically speaking, that doesn't really lead to pleasant stuff.
Yeah. Well, that's good news for crypto. That's good news for crypto because when you're talking about,
yes.
Yeah, when you were talking about different stuff skyrocketing, that's not related to central banks and governments, obviously that's cryptocurrency. That's the whole movement is trying to fight against. So I do think that we'll see that. And, like John McAfee has his $1 million Bitcoin prediction by 2021 or by the end of 2020. And, a lot of what he based that on is the fall of the value of the US dollar and the obviously increased value of Bitcoin. So I think all this is very interesting. I think it's definitely something we all have to keep our eye on. And I do like that your book is not one that is like emergency panic right now. It's like, hey guys, this could be coming or this will be coming. We don't know when. But it doesn't sound
Exactly.
like, yeah, it doesn't sound like, you called it financial preparedness, but it doesn't sound like it's, like those guys that sell, emergency kits and stuff like that online. They're just trying to make a
Oh, for
dollar. So,
for sure. And
yeah.
speaking and uh, I want to make it clear to people that my book lounge is not a funeral. So I even have like I got a ton of sponsors thanks to my channel on board, and I even have a contest through which, as of Monday, the 6th of August, and until the 12th of August, I encourage people to spread the word, to tell their friends on Facebook, on Twitter, whatever about the book. And I have some huge prizes for a book lounge contest. Like the first prize is 1 Bitcoin. The
Oh,
second
wow.
prize is 1 Ether plus 1 Litecoin. I have then 8 hardware wallets, $100 Amazon gift cards, just a ton of prizes for people. Again, it's not a funeral. I am talking about serious stuff. But panicking, being depressed, these things aren't going to do you any good. Just know that bad things are coming inevitably and kind of do your best to position yourself. Oh, and the same way people tend to raise an eyebrow when I say to them that I don't particularly care about the money I make writing books or doing YouTube, but kind of to put my money where my mouth is. Also, this week the price of this book is going to be 99 cents until
Oh, wow.
Sunday. So, yeah, I mean, someone who is in it for the money is not about to write a
Yeah.
400 plus page book and sell it for essentially a buck. And the same way, someone who's only in it for the money is not going to go on this huge campaign on over 100 YouTube channels and podcasts to kind of spread the word precisely when the book is priced at $1. He would do it when it's
Right.
priced at yeah, at probably much higher. And I do believe the stakes are high. Like leaving all jokes aside, we're gonna deal with serious stuff. And of course, your friends, people around you, jobs are going to be lost, families are going to be devastated. These things tend to happen throughout history. There's nothing unusual per se about what's going to happen next, in my view at least. But I do believe that if you take at least some form of meaningful action, and that would be essentially my final message to you guys, whatever you do, I would consider it a huge victory if you just do something meaningful that has to do with the next financial crisis after watching this video. Whether it's clearing your mind, taking a long walk, and just thinking about these things, or anything else, as long as you kind of adopt a proactive attitude towards these things, I'm going to be a very happy camper.
Well, awesome. Well, Andre, thank you so much for coming on the show today. Just one more time, let people know where they can find you and also where they can buy your book.
I'm an easy guy to get a hold of. You can just search for 1 Minute Economics on YouTube or head over to youtube.com/1 Minute Economics. If you want to check out the contest, by the time this gets published, there should be a post live on the channel with the rules and everything, or you can just find it on 1minuteeconomics.com. And the book is available pretty much everywhere books are sold. The digital and print versions are on Amazon, Barnes & Noble, digital only on iBooks, which is Apple's app, and Kobo, or you can just head over to ageofanomaly.com, which is a small website I set up, which just basically contains the links to where you can buy the book.
Well, awesome. Well, thank you so much for joining us, like I said. And until next time, guys, BitBoy out.